Hi, I'm Jeannie Posner, and this is the Posner Property Perspective. As a realtor in Metro Atlanta, I've spent years helping people just like you buy, sell, and create homes that truly fit their lives. In this podcast, we'll dive into everything from home flipping tips, healthy home living, to exploring the unique lifestyles and charms of North Metro Atlanta. Whether you're a first-time home buyer, a seasoned seller, or just curious about real estate, I'm here to educate, inspire, and to guide you through it all. Because buying or selling a home doesn't have to be stressful. It can actually be fun. So let's take a fresh perspective on real estate together. And I'll see you at the closing table.
All right. Welcome to the Posner Property Perspective, where we're going to help you on your journey to home ownership. And our goal is to make it smooth and easy. Today, our guest is Sheri Levin here with Southeast Mortgage. She's going to let you know what the first step is to finding a home. I like to tell people the first step is getting your financial house in order, so then you can find a home. So Sheri and I go back many years now. We've closed a lot of deals together. And I'm so glad that you're able to here to join us and tell us a little bit about what's the most important thing that you see when helping clients find a home. What do you think the first step should be?
First of all, thanks for having me. I always love chatting with you. We have a lot of fun together. We work hard, but we also have fun. So the first step is talking to someone about a mortgage. Talk to a lender, talk to a loan officer, actually talk to a person who understands your story, because that's key. You need to know what your budget is, right? We always need to know, what can we spend? What do we feel comfortable spending? It might be a different number, but that's usually the very first step, is just have a conversation with a loan officer. There's no obligation. People can call me and I tell them all the time, they're so nervous. They're like, well, how much is this going to cost? I'm like, it's nothing. It's just information gathering. Get to know me. Let me get to know your story, and we go from there.
So what you said is very important. Before they go out with an agent like myself, we have to know your budget, what you've qualified for, but really what's key is, what are you comfortable? Because I've had situations, a lot of times you may qualify for a larger amount. That's not where you're comfortable. So when you're looking at a mortgage, it's not only what can I afford, but you have to look at the other things that are going to go into your monthly expenses. So I think probably when they get to you, knowing their monthly budgets of what their expenses are, and then you can help guide them to what new expenses have they not thought about. They're going to have property insurance. Are they going to have a water bill? If some apartments include water, is their trash pickup separate? So I always tell people, I joke with them that the first few paychecks after you move into a house, just write them to Home Depot. We moved into new construction. I didn't think about this when I moved in 29, 30 years ago. Not one window had a blind on it.
Nope.
Things like that. You need garbage cans. You may need a lawnmower. So there's a lot of things that go in. So in addition to making sure your credit is in good shape and having saved for a down payment, you'll need additional funds as well. And I think one of the things you were talking about is, people think, oh, I have to have 20% to get a mortgage, but that's not the case.
That's not the case. And I used to think that too years ago. Our first house, I thought you had to have 20%, but no, you don't. A first-time home buyer, and that means you just haven't owned a home in the last 3 years. It doesn't mean you've never owned a home. If you haven't owned a home in the last 3 years, you qualify for a 3% down conventional mortgage. FHA is 3.5% down. Our veterans and military, 0% down on a VA loan. So no, you don't need 20%. I actually don't even, I discourage against the 20%. I'll have different scenarios. And I'm a huge believer in 10%. If 10% is a comfortable amount, then that's a good payment. It's a very low mortgage insurance payment each month. So we look at options. We don't always know until we see the numbers on the paper what really works for us.
And what is one of the first things they start with? A lot of people don't even know how to get their credit score. Or, they listen. I love Dave Ramsey, but he'll tell you not to have any credit.
That's right.
But there's a little bit of a problem with that when you go for a mortgage or you
Right.
go for car insurance.
Right.
So how do you help them in reference to
So
getting
if they have no credit at all, which happens, right out of college, a few years out of college, you start small. You get a secured credit card. I helped my daughter's boyfriend with this years ago. He graduated college with no scores at all. And I mean, he's so proud of himself. So that credit card that's secured, and you just Google it, you'll find it, you'll find how it works. It converted into an actual credit card. So after so many months of good history, he graduated it into a real credit card with like a $500 limit. So over time, you're going to build up credit history, which is really what calculates a score. And credit cards are huge. It's like 35% of your score is based on revolving debt. So you're borrowing money and you're paying it back on time, or you're paying back the minimum payment on time. And it's repetitive over a certain amount of times. Now, he didn't start with great credit. So as soon as a credit score there was enough information to create a score, he was in the low 600s. So you start low, but over time, with good payment history, you build it up. I mean, he's up in the mid 700s now. I mean, he got a car loan at a very good rate. So you have to build credit. Do you need perfect credit to qualify for a mortgage? No, you don't. There are different programs like FHA. We can go down to the low 600s.
And 600 is referring to the credit score for those who are not
to the credit score, right? So we pull 3 bureaus and we look at that middle score, and that's your qualifying score. And if you don't even know if you have a score or not, you can go to annualcreditreport.com and you can get a free FICO credit report. So that's a good start. You get one a year, I think, one free report.
Once they fill out the application with you, you got their credit score, you've gotten them to get you, I guess, tax returns, they've gotten you pay stubs, you've kind of sat down with them, gone over. What is that process for you to go over?
It's taking a loan app. So it's really a conversation. And during that conversation, I'm actually taking a loan application. A lot of loan officers like their applications taken online by the client. I like to talk to them because you do want to know the full picture. Oh, I forgot to tell you, I'm on my mom's title for her property. Well, that could cause a problem down the road. So it's important that I talk to people and I ask them these questions, but I'm taking a loan app during that process. I find out about their salary, how much money they have in the bank. We pull credit, and then we start talking about numbers. And at the end of that process, I do request these documents. I like to see them, verify them. Sometimes people tell me what their income is after taxes, and we actually get to use their gross income. So I gather all those documents, and now they're pre-approved. They're pre-approved, gives them confidence on putting in offers. It gives you confidence as their agent to start showing them properties, knowing they could put an offer on the house if they liked it.
And that's the important thing. So by the time I get them and we're going to look at properties, I know that they can qualify, because the worst thing would be is to show them a house, they fall in love with it, and then to find out they're not going to qualify for the loan. We don't want that to happen. So it's better for everyone. You start with your loan officer. It's really important for your agent to have a good relationship with your loan officer, because there are hiccups that come up along the way. And you want people who are communicating, so there's an answer to everything, is what I like to say. Everything can be resolved. You just got to let me know what I'm dealing with, and I'll find the answer.
That's right.
What are some of the common misperceptions that you see? I know we talked about the down payment.
Right. A couple of the myths. Sometimes people just feel like it's just too much. It's too much of a process. It's too overwhelming to go through that to get a loan. And that's where myself and my team come into play. We try and make this as easy as possible because you're not doing this every day. We're doing this every day. This is not a big deal. We know how to communicate with insurance agents to get the information we need. We guide you through the process. We don't, we sometimes, I know this is true for you too, Jeannie. We sometimes turn into therapists along the way,
Yes.
but we try and keep things calm, moving forward. Believe me, I'm worrying a lot more on my side than you ever will. Let me do the worrying. We get through things very quickly and easily on our side.
And we like
This
to do
is,
the hand holding so that the process is easy and smooth. Like you say, you and I go through it all the time. But for a lot of these clients, it's their first mortgage they've ever gotten. It's very overwhelming. And sometimes I forget things that I just take for granted. I was like, oh no, I got to go step by step with you because you've never had a mortgage before. And it can be overwhelming. And it's really an easy process. If you were able to pay your rent on time, you're going to be able to pay your mortgage. So we just have to know the amount and we'll get you through it. I think one thing that has happened that I don't sometimes know if it's covered, when you look at the taxes on a property, when they're buying it, it's kind of based on the previous owner's information about the house and what the county has assessed it at. But now you've purchased it and you have a purchase price, and therefore the assessments may change. And have you ever found out that like the second year, because I know property values are still going up in Georgia, have people ever called you and said, oh, all of a sudden my taxes are higher?
yeah, they usually call and say, my mortgage payment's higher. You said it wasn't going to increase. I was like, well, I told you your rate was never going to increase, your interest rate. And it has happened quite a lot. And, we can't control the taxes. I tell them you can dispute mid-year, appeal the property assessment. I'm in the same boat. It's happening to all of us right now in Metro Atlanta. But it's
Right.
something
So,
that it's a conversation we have, especially if I have a client now, the tax bill on the property that they're buying is under 350 a year for Cobb County.
oh, that is not good.
That's not going to stay. So the current owner was over 65 years old, a veteran, and their tax bill was very low. And even though, you might actually still have this tax bill this year, we're going to ask the attorney. We're going to say, listen, we got to make sure that we're setting expectations because I don't want there to be a shortage. What if this year's tax bill reflects the new sales price and the new owner? The bill isn't out yet. So we try and avoid that sort of sticker shock when they do get that new tax assessment and they know that their tax bill is going to increase. We try and do all we can. It's
Well, I
taxes.
think it's true. So what's happened in Georgia is insurance has gone up, which a lot of states are finding it, but in Georgia as well. We're not as bad as Florida, but we've definitely, our insurance rates have gone up. Taxes have gone up because our values in our houses have gone up, which is a good thing. So you always have to pad your budget a little, and I think people have to remember that. So they understand, like you said, the amount of their interest and their pay, that part of the payment is not changing. So that's the good thing.
Yeah. Yeah, but you're right. You gotta have cushion. So when you're thinking, I'm putting 20% down. I don't want to pay mortgage insurance. This is what we're doing. I kind of like paint the picture. Okay, well, if you have so much money after the fact in savings for the hot water heater that's going to go out in 2 years, or the dishwasher, or your tax bill, or whatever, then I'm fine with it. But once you put that money down on the house, and we're learning that now, all these people who bought, years ago, good interest rate, they can't get the money back out. It's expensive to now pull your equity back out. So don't put it all in.
What you said is kind of interesting. I don't think people thought of that, but a lot of people always talk about, oh, after several years, you've built up equity in your home. The values of the homes have gone up consistently. They usually go 4 to 5%. Yes, we had a few years where we saw 30%, but on the whole, they usually go up 4 or 5% every year. But if you're at an interest rate of like 3%, you're not going to go refinance at the present time and get an interest rate or a home equity loan that's at 6. So you're right. You don't want that expression of you don't want to be house poor. And I always tell people when you own a home, there's always maintenance going on because you want to keep that value of your home going. Be it we're about to paint our home. I'm getting quotes on painters, and there's always something that you're going to be doing. So you need to put aside a little bit of money each year for some kind of improvement or update that you want to do on your home. So you're going to, like I said, you want to keep the value in the home. We've helped customers throughout. We have a lot of fun stories of some of the customers we've worked with, and a lot of them have become friends. And I was wondering if you had any stories where you kind of helped someone come over a challenge that they didn't expect when they were in this process.
You know, I have a story, but I also remembered something that a client you and I worked on. And I was like, did I really drive out like last minute, jumped in my car to get somebody to hand sign something? And I think it was actually the seller. It wasn't even on our side of am I remembering that correctly? Like I went out there, met this woman in her driveway. She signed it. I scanned it on my phone and sent it to the attorney or something. I was like, God, that was crazy, but we did it,
We
right?
did. Look, I got called into by the compliance attorney, and it was very scary when, the compliance attorney calls you in from your brokers and says, we have a problem. And I'm like, okay, what's wrong? And they're like, Jeannie, we've noticed that a lot of your contracts are hand signed. And I started to laugh. I said, well, I do a lot of downsizing, and a lot of my population, they're over 75. They're not comfortable with the computer. They don't trust it. And they went, oh, that makes sense. Okay, goodbye. But a lot, there are times we make that extra step. Like I say, my clients aren't comfortable signing on the computer. So I go and I bring them the paperwork and we sign in person. It's all about making this journey smooth and easy and making them comfortable. So yes, I think that we do.
So
We
yeah, I
take
do
the
have a
extra
story
step.
if you have time.
Yes.
Sorry if you hear my dog barking. Let me give her a little chewy. Sorry.
No,
So I
we're
have these
dog friendly.
clients, adorable clients, young, just had a baby, and they own 2 investment properties in Costa Rica. And I saw it. I saw on the bank statements there was like these deposits, because I'm reviewing. I'm not being nosy. I'm reviewing. I want to look at things like an underwriter would. And there was a bunch of VRBO deposits and Airbnb deposits going into their account, which was the main account that they were going to use to buy this house. So I asked them, they're like, "Oh yeah, we have 2 properties in Costa Rica that are investment properties, but we don't have mortgages on them." And I was like, "Well, when I asked you if you owned any other property, this is what I was referring to." But they figured, hey, it's not here, then it's okay. This can cause a problem because we do have to use a housing expense, so taxes and insurance. And if there's any HOA, that monthly housing expense for those 2 properties now have to count against them in their debt to income. I mean, every time I talk to them, they're sweet as can be, but I hear the baby and it was a lot going on. And I was like, can you get me the tax bill? And they're like, had no idea what I was talking about. I guess somebody manages these properties. So speaks complete Spanish, couldn't go that route. So, and I don't know if you know anything about addresses in Costa Rica, but they're not like ours. Like it is like very confusing. And he told me
Your
that. He goes, it's
mic
not a
went off.
normal address.
It stopped. I can't hear you.
Oh, can't hear me.
Move. Did it stop?
Can you hear me now?
Now I can.
I took this
Now
off.
I can hear you.
Sorry. Long story
Nope.
short, I found the tax bill. Oh, and each property one was owned by the husband, one was owned by the wife. different names, last names. So, I mean, I really pulled in that middle school and high school Spanish, and I found the website, and it's all in Spanish. And my loan processor and I, we pulled all these documents together. We figured out really which property it was based on the name, got in touch with the insurance agent. Everything was in Spanish. We sent it to a translating service, documented everything, made it so easy for the underwriter, and they're like, done. I mean, but this was like right before closing. This was like, it was a quick closing to begin with. So this was 2 weeks before. Anyway, it was fun. I have to say, I like that kind of challenge. But we try and do all we can for our clients. You know, if we're able to access this information for them, give me your CPA's email address. Let them know I'm reaching out. Let me reach out to them and get what we need to know.
Get that information.
Thank you. So we're not afraid to pick up the phone or send an email.
What is the biggest mistake you've seen a client make when it comes to financing?
So I luckily haven't had too much of this. In our office, something came up where I think the client bought like a sports car the week before, and it was like a very expensive one. And it basically was a car payment. It was a lease, and it killed the deal. And they lost their earnest money. I mean, so these things do happen. I know we kind of stress it a lot, don't open up any new credit at all. Don't open up a new credit card. And another thing to keep in mind is just to continue to use your credit the way you have been, right? So if you normally charge up a total of $3,000 a month on credit cards, you can be consistent with that. You don't have to stop using them, but the lenders will all do a soft pull. And what they're looking for is balances. Are the balances about the same as they were previously? Is there any new credit? So if all of a sudden the balances on those credit cards are now 10 grand, it could go back to underwriting. So once you're out of underwriting, you don't want to go back. You want to stay in closing and get to the table. So those are things, and I tell people, life comes up. Just call me. Call me before you do anything. Call me before you take a new job. Okay, because the pay structure can affect the loan process. Just let me know what's going on. I tell people, be open with me. I'm a broker.
All about communication.
I work with lenders. We're the in-between. Tell me everything. And that's the way we can, if there are issues, we can get through them because I know them. Some other issues, let's see. I wrote some down. Waiting too long to get pre-approved. Not everyone can wake up tomorrow morning, call Jeannie and say, you know what? I think we want to move. Some people have everything in order, but the majority of people do not. You have to be prepared. So you got to get pre-approved. You got to know what you're getting into. You got to have savings. The days of having no money and buying the house are over. There's no first-time home buyer, unlimited bank in the sky somewhere anymore. Like, you have a good job, you and your partner are making 100 grand or less, you're not going to qualify for any of this. It's really rare. You got to do the savings. You've got to cut your expenses. I mean, it's clear as day. You're not going to, save up $10,000 by making coffee at home, but it's a step in the right direction. You got to pull on the purse strings, and you got to do it for yourself.
That goes back to knowing your budget ahead of time. If you figured out what your normal monthly budgets are, and then we can work back into getting you approved for that mortgage and finding that comfortable spot, because you can own a home and you're building equity. And that's what I try to explain to people. I have someone right now, I don't normally do leases, but we're helping someone out, and they're leasing a house that's $4,000 a month. And I'm like, why aren't you buying? And they had all these excuses, and I'm like, if they've rented for the last 20 years, and I'm like, that is because in their culture, you just don't buy a home. I mean, I know it's just, I feel bad because I realize, look at the equity you would have built up over the years. And to give your family that financial security, knowing you have a home and you're developing a legacy for your family. Not only are you showing them responsibility and financial responsibility, but you're establishing something and you're going to have the future with that home and what it can, how it can help others down the road, generations from now, helping them
Yeah,
get
and
into a home.
that property that they're going to lease, the owner could decide they want to sell it in a year or two. Then you got to find another place. It just gives you a sense of security. I mean, it's a huge accomplishment by far, especially today, to buy a home. And it's worth finding out more information, right? It's worth a phone call. It's worth seeing if this is doable. That's another issue that happens is, I don't think I can afford this and my credit's not that great. And I'm like, you're 700 credit. Like, of course it's fine. Like, how much money do you have in the bank? Oh, and I have this, and then my parents are going to give me 5,000. And, it's just the unknown, but it's definitely like all things in life that are a little scary. You got to fill your head with information so that you can move forward.
And have an exciting future. Sheri, I want to thank you today for joining us here on the Posner Property Perspective. We both would love to help you on your journey to home ownership. There'll be information below how to get in touch with us with any questions about qualifying for a mortgage, finding that perfect home. And we always like to say, we'll see you at the closing table. Thank you.
Thanks, Jeannie.
Thanks for tuning into the Posner Property Perspective. I hope you enjoyed today's episode and found it helpful as you navigate your real estate journey. Remember, whether you're buying, selling, or just exploring the market, I'm here to help to make the process smooth, exciting, and stress-free. Let's take the next step together. Contact me today. I'd love to hear from you and make your real estate wishes come true. Until next time, take care, stay inspired, and I'll see you at the closing table.